This is that pivotal moment in the cycle where dumb money gets richer and they believe they are going to be rich forever. So that's why I put a warning on today's video. If we can understand where we are in the cycle and how this is all going to play out to the best of our ability, hopefully we can turn from dumb money into smart money. If you like the sound of that, you know what I want you to do. Hit the like button, subscribe to the channel if you are new here. Plenty of content to get through, especially with a recap of some of the previous videos we looked at the peak. I'll get into that later because we do have over 10,000 new people here since these videos. Guys, I think it is a great time to begin yet another video with our legendary investor and sex educator, Warren Buffett. This time, what I've got for you is the only question is whether you're going to do it today or tomorrow. If you keep saying you're going to do it tomorrow, you'll never do it. You'll have to get on it today. So whether that's trading or sex advice, I'll leave that up to you. But I think this is pretty good to use as trading and investing advice at this time in the market. If you keep saying you're going to do it and you leave it till tomorrow, eventually you'll never do it, and you may not get a chance to do it until it's too late. And so you have to get on it today. Whatever that plan means to you, I'm going to leave that up to you. I try to share with you what my plan is, looking at the market day to day and what that analysis looks like. So with that in mind, let's carry on and have a look at how this dumb money is potentially getting smarter, but eventually it sort of backfires on them as the cycle progresses. And so this first bit of data here that we're looking at is a report on both smart money and dumb money are pretty bullish. So when we take a look at the charts here, you can see that smart money has been also getting bullish here. Optimism has been ebbing lately, but essentially has been on the rise, but it's just coming off the boil. Smart money confidence jumped as stocks rallied, which is the opposite of typical behavior. Both smart money and dumb money confidence are above 60%, another oddity. So you got the smart and the dumbs looking bullish towards the market. S&P 500 returns a similar behavior, after similar behavior was inconsistently weak over the next couple of months. So something to keep in mind when we see this information, when we see this these data points, it's a little inconsistent over a shorter term, so over those next few months, and I want to show you that on the charts here, looking at some of our support and resistance levels over the coming months. But back to the data here, you can see it's odd to see the smart money rising along with stocks. So there's smart money rising and stocks are rising. Typically you see stocks fall, smart money rising here. So they're getting more confident as the market goes down. But we're starting to see the opposite. And of course, we see dumb money confident when stocks go up as well. The same thing happens for Bitcoin and crypto. People get more excited as the prices increase. Strange to see smart money rise by 10% or more during a month when the S&P 500 rose significantly. So that's something we want to look at next. So S&P 500, after a greater than 3% rally in a month, S&P's up 3% a month. Smart money rises more than 10%, greater than 10%. What is the outcome here? So 6 months later, you've got a 90% hit rate of positive returns on the S&P 500. Now, I typically look a little further out than that. I like the 12 months or more. That drops it down to roughly 70%. But as you can see here for the 2017 result, it was basically negative 0.5. So if you took that one out, then you've just got two bad results here, 20% loss and an 11% loss in 2000 and 2007, which leads to the point about the macro cycle. The cycle that we very much follow is the 18.6 year cycle. So if you know where you are in this cycle, maybe you can avoid some of these losses here with the smart and the dumb money. So as I talked about, I think we're in this stage now where the dumb money is getting richer because the markets are going up together, as at least this one piece of data points out, as we've done with plenty of other videos. You've got smarts getting bullish, you've got dumbs getting bullish, and at some point in the market, usually towards the end, usually towards this winner's curse phase, everyone is getting rich together, but that's typically what leads to this big correction. It's when everyone is on the train together, that's where you get a peak. You don't get a peak in the market when people are still bearish around the markets, when people think it's too expensive, I can't buy it anymore. It's going to be, everyone's going to be priced out. People can't afford real estate. It's too expensive, yada, yada, yada. That is not the sound of a peak. That is the sound of either an uncertain market where you've probably still got further to go, meaning it's a wall of worry, market's probably still going to go up, or if you have enough people saying that where it's looking like we're going to have a collapse, of major recession, a depression, too much money printing is going to destroy the economy. You're probably looking somewhere around a low. If not, you're going to be at that low at some point in that near future. When there's a lot of pessimism, it's typically around a low. We should know that by now, especially when we look back to the low of 2022, the most recent low, where basically everyone thought that we were in for a recession at that time, and then in for a recession in 2023, didn't happen, and then for a recession in 2024, and it didn't happen again. So that's the point I'm making about this particular data here. We look forward, there's probably still more upside, but the big warning is don't think that it's going to last forever when everyone is bullish. When everyone is bullish, it's a time to be fearful. We can go back to Warren Buffett on that one. Be fearful when others are greedy, and that's usually at the time when almost everyone is greedy. When you get that sort of 80 to 90% of people being greedy, that's a time to be fearful, and then flip it in reverse and be greedy when others are fearful. That's usually around those lows. You never know if it's the exact low in terms of the price or the exact timing, but you have an idea that it's somewhere around that point, as we've covered here on the channel as well. So thanks again, Warren, for helping us out with the investment quotes and our sex life quotes. You have to get on it today. So just make sure you get on it today. All right, next piece here. Unrelated indicators lending weight to the bullish case for the stocks. Some indicator signals are best used not as a standalone trading system, but as weight of the evidence. So again, we try to build the evidence as opposed to just pointing at one particular indicator. We've got a lot of data points here. I did want to mention on this particular chart, looking at the cycle itself, just before I get to that one, just look at where these data points ended up. We're at the peak of the mid-cycle in 2000, 2001, peak of the end of cycle, 2006, 2007, and then the next data points were basically on the breakouts of the all-time high. Breakout, nice. You get another breakout, nice. Breakout, yes, you had COVID, but then pretty quickly it was a massive V-shaped recovery, nice. A breakout of the next high, there was two more signals here, those two dots, great. And then you had another breakout of the all-time high right there, and again right there. So the signals are coming at the breakout of the all-time high. Just know where you are in the cycle. So sorry about that jump back. I think it was just really, really important to understand where these signals are coming, especially as we focus a lot on the end of the 18-year cycle. And what I think we're in, winner's curse phase right at the top here. Therefore, the signals are coming together that the dumb are going to get rich together. Let's see if we can go from dumb to smart money. And yes, I know that's not exactly how it works. We're retail traders. We're always going to be dumb. So to this data point here, let's have a look at it. This is dumb money confidence. So a lot of confidence here with dumb money, similar to what we just looked at. And you can see as the dumb money confidence rises, it needs to keep rising, and it can keep rising for a prolonged period of time. The red dots are your signals. You can see that it's crossed here above the 0.67. Generally, the higher dumb money confidence, the more unfavorable the implications for stocks. The people who tend to be the most wrong are getting too bullish. And the reality is that this indicator typically reaches a high level before significant market tops, but we did find an interesting quirk. As long as the bullish consensus grows, it can lend more buying power to the market. Get it? It can keep going longer than people anticipate. And I've put up many quotes about this from some of the legends, that the markets can remain irrational longer than we can remain solvent, meaning they can go up longer than what we think is humanly possible or reasons for it to be possible. It's not logical. As soon as we can remove that logicalness from the market and think that, oh, we can figure out the market, we can be more logical than the market, I think it just makes life so much easier in the market just to go, screw it. It's not that logical. Keep trying to put logic to it and listen to analysts tell you why this economic data and the reason for inflation, it's going to dump the market, and the reason for PPI and CPI and interest rates are going to crash the market. It's going to crash the market over and again. It doesn't make sense. It doesn't matter, because just follow the chart. Following the chart seems to be far more easier, at least from my own analysis and from what I've been sharing with you guys here on the channel for quite some time, for many, many years now. Now, We're going to get to Bitcoin in a second. I found some really interesting stuff when it came to the cycle and to Bitcoin as we lead into this peak and the collapse off the back of this particular post. If you guys aren't on X, do so now. Go and subscribe. A lot of interest in what happens around that peak and what might happen to our Bitcoin, what might happen to our assets. So I'm going to do more Q&As either on X or on Instagram, which is way easier. Links are in the video description. Make sure you go and sign up to that. And I'll do a Q&A over there as well, especially with the end of the cycle, in the coming years, how to prepare for it. Lynn Alden, if you don't know who she is, great macro economist talking about how that the landscape works. This particular video, this one's 12 days ago, and she's been talking about it a long time. The government could take your Bitcoin. They can steal your Bitcoin like they did with gold in the 30s, something like that, nearly 100 years ago, right? So they can steal your Bitcoin. I found that really, really interesting. And you guys who have been on the channel for a couple of years might note that I did a live presentation with Phil Anderson on the Gold Coast back in April of 2022. So over 2 years ago now. And Phil specifically talked about, will the government steal your crypto? Essentially talking about the government taking your Bitcoin after 2026. So I find it really interesting that Lynn's also talking about this now, and that, we talked about this a couple of years ago. So what are you going to do? You're best to hold your own keys, and that might not be enough either. This isn't available at the moment, but I'm aiming to get this available again. If you want to get a copy of this presentation that we did, so you can see the sales ended, subscribe to our free report. That's also coming out today. And when that is available again, I'll do an email out so you guys can get a copy of this particular seminar that we did. It was about 3 hours long with Q&A as well. It was like 95, something, $100. I think it was in Aussie dollars as well. So when this is available, I'll let you know if you get your name on the email list. Right now, the best thing I think we can do about it is to learn how to self-custody. And of course, understand where we are at in the cycle, whether you want to take some profits on that. So with that in mind, let's have a look at BTC, where it currently sits, being $62,800. And I've got this particular chart here, just looking at the resistance levels to the upside. Yesterday's video was pretty detailed on the next 6 months or so of Bitcoin price and where I think it's going from there. So I want to focus on the shorter term, as I said in yesterday's video, just looking to the upside for the resistance and then to the downside for the support. As I don't have that crystal ball, I never know for sure, I can't guarantee anything if we're not going to see any sort of downside from here. So that's why I focus on the resistance levels to the upside, and this determines the strength of the market. If it's able to overcome these levels one by one, then once it gets to a certain level, the probabilities of it falling past the support become almost impossible. Not impossible, but the probabilities are far on your side to the upside as opposed to the downside. So let's start with the shortest term time frame. The 1 day here is 63,300. So I'm looking at the 50% level from here down to here. That comes out at 62.9, and you can see it's 63.3. Why the hell did I write that? Well, I'm looking just at the top of this particular fear bar. You can see that on the Monday, the 24th of June, big flush out, and then we didn't fall much further. So I want to see Bitcoin close above the top of that bar, $63,302. So give it a few more bucks above that. You can see now it's starting to attempt it, and it's pushed past that in terms of price, but it didn't get past there on a close. Didn't get past there on a close yesterday, closed under the 50% at 62,858. And here's another day now that it seems like it wants to attempt to close above that level. The significance of that bar is that the emotional sentiment, market sentiment changed at that time. The psychology of the market on that bar basically says everyone's shitting themselves. We got a fear and greed reading of 30 on that day. That's what the reset was back here. And from that point, well, the market's pushed higher. So it needs to, the price needs to close above that level to basically wash out that fear. And then we can start to mount the attack to 65.2, which brings up our 1 week resistance level. So climbing above that, some consolidation, that washes out that fear, and then we mount the attack at the next 50% level. So this is how I marry the science and the art of trading together. You've got the market sentiment, you've got some science there where you've got exact levels, because that's what you want with science, but then you also need some art to it, because nothing works 100% of the time. But if you can understand the sentiment and the psychology of the market, it throws a little more weighting on your side. It comes with practice, comes with time. So 65.2, that's the next weekly level there, 50% level. The top that we just had, there was peak inflows, peak ETF inflows at that peak. And of course, the market dumped from there. So heaps of people piling into that top, and the market dumped from that point. Let's have a look just to see how much they've been washed out. 19%. So a pretty reasonable correction considering this recent bull market of Bitcoins, with the biggest correction being only 23%. So yeah, they've been washed out. They've had their time. Maybe they got flushed out on this particular bar. So that's it. 1 week there, 65.2. That level also lines up with the entire range. So low to the top. So that's the all-time high at the moment. And look at that 50%. Absolutely smack bang through the middle. And it comes out at 65.147. So almost exactly the same as this level here. So 65.2 is a very critical level for Bitcoin to consolidate above yet again. Okay, if we can get above that, then I'm looking at the support and resistance at 67.2. You guys can see that there with the white line. It's had many, many hits. Support, broke down. Again, resistance, broke down. Resistance, little reversal. Only managed a few days above. Support, support, and then support, and then the breakdown, then resistance. So there's a lot of interest around that 67,000 level. And just to give it a little bit of a sharper edge, 67,200. So if you can do all of those things, then you're starting to put more of the probabilities on your side that, well, probably those lows are in and Bitcoin's getting ready to tackle the next prices. And that is the 1 month resistance here at 72K. Look at those tops across there that it's had several rejections now. But to the underside, well, so far, you're getting some higher lows, right? So 72K is basically that next major level. And then of course the old all-time high at 73,800, call it 74K. So 72 is important. It has only had 2 daily closes above that level. Very, very important there. So to me, if I had to just look at these levels and I was, resistant to get into the market, I'm a bit more conservative, I would be looking at the 1 week there, right through the middle at 65K. And that would give me a lot more confidence that Bitcoin's building to get back above these levels. While it's under these levels at 65K and even under this 63K, you're sort of taking on more risk, but the reward is obviously higher because you're getting in earlier. So do you pay the premium to get in later? The premium being the price is higher, but you've got more weighting on your side, more confirmation. Or do you play it like a degen and try and get in earlier, knowing that there is more chance of it going down? That's entirely up to the trader. So when people say, is now the best time? Well, it's entirely up to the trader themselves, because some people love the risk and others don't love the risk so much and they want to get in higher. So resistance out of the way, support levels, pretty straightforward. 60K at the lows here, we saw it flash crash and then higher low form. So 60K is the first, 58 is this low here, 56.5 is this low here, and then we look back to 50 to 53. So that's this level right through there. Very, very straightforward. If there are any corrections, I've got my box here saying no stress, because it's still in a macro bull market. It's still above the major 50% level. So when this thing resets, you'll see that it's the top to the cycle low, and that's 50% through the middle. So anything into that zone is still fine. It just means more time to consolidate until we break to the new upside prices. Anything under that level, then I'd be starting to shit myself. Anything under sort of the mid 40,000 region, that's where I would start to crap the bed and think that, well, maybe the cycle is over. Should I get scared or should I just sell? Maybe I do both. You let me know in the comment section. Do you get scared and sell, or do you just let it ride it out and just say, I'll be back in 3 years' time? With that in mind, 3 years' time, that could mean that this was a left translated cycle top. Now, I'm not in that camp. I don't think this is a left translated cycle top as it currently sits. I still think we have more time, and I've mentioned why. I think we're in this winner's curse phase, so there's going to be more money floating up into the system. But nonetheless, I know in yesterday's video I did talk about this left and right, or I didn't get into it in too much detail. I just want to mention here that we've only got a few more months to go until this happens to become a technical right translated cycle. If we get into November and the price ticks higher by November or in November or later of 2024, then technically it's a right translated cycle, which means it's very similar to the previous cycles. Now, at the moment, this is what I wrote out here, best case scenario in play right now. So that was what I was looking at back in March. And that just means that it's had time to consolidate, and quite a reasonable amount of time to consolidate at these levels. And hopefully it goes high. If it goes high from here, then I think we go into this right, boom, and bust. If you look back at the other cycles, every time the right happens, when we move into a right translated cycle, that's the boom and the bust. That's the boom and the bust. There's the boom and the bust. And of course, it's on a logarithmic, and you guys know that that bust is 85% to the downside. Obviously here, yes, 77%. You get the deal, right? The left side has typically been consolidation and a climb. Consolidation and a climb. Consolidation and a climb. And you can take it back to the previous cycle. Basically, it was very early days. It was in the sense. So you still had some consolidating periods and the climb. There's more consolidation, and then you had that boom up there. So still looks like a right will occur. No confirmation yet. Boom bust, I think, is still on. That way is up with the rest of them here. And just taking a quick look at this previous top. This was the video that I did in March of 2022. I think it's interesting to note these things because my outlook's typically months, and I start to get those signals early on, whereas at the time, the masses are getting very, very freaking triggered. You can see that in the comment section and basically just how the market's responding. So here's just a quick little take of this video here back 3 months ago. Starts out here, we're in reaching for a much wider audience. And you've got the comments here. You can see the triggeredness from people when I suggest the possibility of an intermediate, a local, a short-term top for Bitcoin, which is happening and has happened now because we have one of the longest periods down that we have seen since January, that this could be a time that Bitcoin just needs to consolidate before we go on another mega run. You can see that just the thought of ETFs not living up to the expectation that this is a new cycle, a super cycle, this time is different. Put your TA charts away because it's never going to work. It's only about the ETFs now. That is a really toxic place to be in as an investor. ETFs are there, markets are going up overall, but just be aware that when this tide is about to turn, when it's ready to turn, most won't see it because they're too invested in narratives. ETFs, yes. All right. I think that's a pretty good summation of what I think is going to happen towards the next peaks. And of course, again, I just come back to this. Winner's curse phase, the same toxicness will happen at these peaks. So the rich, the dumb are going to get richer. The rich always get richer. And then as we get into that peak, I think people are going to get too invested in their narratives yet again. And they won't hear the warning signs as they begin to show up. So it doesn't mean that it is going to collapse straight away. As you can see here, that was the signal. Now it's been over 3 months underneath that old all-time high. That's essentially what I said at the time. You can go back on the channel and see any of those videos from back there. And also with the altcoins, they were putting in higher lows. Not all of the altcoins are going to make it, and pretty much, a lot of them haven't made it. But you still have some strong altcoins that are winding up. With altcoins in mind, I might leave this to the next video. So I'm going to look at Ethereum resistance and support, how that's all playing out here on the longer term time frame, and also look at Solana as well. I want to save you guys a little bit of time today, do something under 30 minutes for once. So like, subscribe. If you do want to get a copy of this, make sure you subscribe to the free report. It's coming out today as well, so you get that free report and you'll be notified when the Ultimate Trader Accelerator is ready for you guys to jump on board. So it's an absolutely free course for you guys. Thanks again for your support on the channel. I've got a few little dad jokes in here as well. So yeah, much appreciated. See you guys at the next video. Till then, take care and peace out.